All right, and we should be live this time. Let's see if it works.
I think we are live.
All right, cool.
All right.
It's working. Time for intros and everything. Man, we're getting
Yeah,
better at this
cool.
every time.
Yeah, I mean, we know how to start a webinar. How cool is that?
Oh, sweet. Okay.
So, welcome to episode 8. We're doing this on a Tuesday because unfortunately I have to go to the Masters tomorrow. So, feel bad for me. I'm going to be gone for a few days. Pat, you want to go ahead and introduce our guest, then we'll get into a little bit about the market, and then
Okay. We have Grant Bailey on the call here. He is from Rochester, Indiana, which is actually really close to where my father grew up.
That's awesome, by the way.
If you've been there, you'd know.
I have not.
Anyway, so what's happened is I've connected with him on LinkedIn. I followed a lot of the stuff he's done. He's actually made some really good calls on the market. We'll get into that later. He's asked me some questions though along the way, and that's kind of how I started to have this interchange with him. I want to discuss that some. But Grant, why don't you tell us what's going on, what it's like in Indiana, and more importantly, let's start with the important stuff. Are you a Notre Dame fan? Because I want to know that.
So it's complicated. So I do really like Notre Dame, but I'm also an IU fan.
Right.
So if you can accept that, I like both.
Okay.
But do not like Purdue personally. It's only a sports thing.
Got it. All right.
So why don't you tell us who Grant is, by the way, just because we all know, but
I'm sorry. I thought I did that. You know what?
No clue. And they're probably wondering, like, why these guys have a high school kid on their podcast?
Okay. So I'm sorry.
Our intros are gold.
Right.
So Grant started something called the Value Investors Community on LinkedIn, right? And so I kind of engaged on that a little bit. He's a high school kid. He's published some cool research online. He's been published some, independent things, not stuff he's put on his own, on other people's websites or whatever. And so I thought it'd be cool to bring him on. Jeremy has kids, I have kids, you have kids. Seemed like the right thing to do. That's what it is. Is that good enough for you, or you want me to go? Want me to do the whole thing? I'll ask the whole thing up front.
No, it's just if I tune into this, I'm like, well,
all right.
These guys have had. I mean, we've had like older people on like every single episodes, and now we've got a high school kid, and you're asking about Notre Dame.
My bad. All right, so he's an equity analyst. Grant, he just happens to be in high school. Period.
All right.
Yeah. All right.
Age knows no bounds when genius is in play.
All right, so Matt, why don't you start with the market and get me off the hook on this?
All right.
Thanks. Thank you.
Yeah. So obviously, this is our first podcast since Liberation Day, which turned into Liquidation Day. We have been warning you. Trump and Besant have also been warning you. This has been. There's a lot of big sell-offs that can catch you by surprise. This one shouldn't have. DeepSeek, no one saw that coming. COVID, no. This was telegraphed well in advance. Today, so far as we're recording this, we're having some sort of a bounce. Market made a bottom. I don't know if it was the bottom. I don't think it was the bottom, but the bottom has to start as a bottom. We opened up yesterday down over 5%, closed near the flat line. Today is rallying a little bit more. We are well off the highs. This is normal behavior after a time like this. You don't normally expect a drop like we've seen to just be a V-shaped recovery like we saw in COVID. People are drawing parallels between this sell-off and the COVID sell-off. Maybe from a chart standpoint, stuff looks similar, but the causes, everything that was going on, totally and completely different. I do think this one is going to take months to resolve. So you're going to see a lot of volatility. Just be careful. By the time we're done with this whole game could be gone. Or we could be up 5%. I wouldn't be shocked either way. There is no real playbook for this, but as I wrote about in today's newsletter, now that we made a low on yesterday, at least we've got levels that if you're a trader, we can trade off of. But I would still be very careful. I would not be going in whole hog. Just be very, very cautious. Jeremy, what are you thinking here?
Being a chart guy, I can see exactly how you can draw the parallel. It does look familiar, and we always say the market is really good at rhyming, but it's never going to be an exact, history repeating type of Groundhog Day moment. However, there's a little bit of context you have to take into consideration here as far as the differences go before you go and even look at the chart. So that way you're not having a presumption of what you expect to see, and you're not allowing your mind to tell you what you want to see when you really should be looking a little bit more objectively. So that's a long way to say that we've kind of got the reactions of the market in a situation where we definitely expect volatility. We definitely expect, the old saber rattling and foot stamping to go back and forth, especially between us and China. But historically, you look at some of the metrics in there, and even in Trump's last presidency, I mean, what was it, like 20% tariffs were imposed on Chinese goods, and the consumer only really saw, a 0.07% increase in prices from Chinese goods. So when you think about that in the perspective of how's the market going to react to this, of course it's going to overreact, but it always kind of digests a little bit. So being a pure chartist kind of allows you to see things for what they are. So you can have bearish trends, you can have bullish trends, but everybody forgets about the sideways trend. So the market can trend in three directions. And I think that's exactly what we're going to see here. We're going to see the relief rally. It establishes the range for the consolidation, likely to consolidate for a while. When that trend finishes, then we'll have a break and we can decide, do we get back into market long, start making some long-term investments, or do we sit through some more volatility as we wait for the market to continue correcting? And then historically, we look left on a weekly chart, we can see, all the way back from December of a couple years ago, long trend. We've hit exactly the half mark on that. We've come down to about half that trend. And we're at a point where we can still go either way. But typically when we give a half back, we'll tend to digest it a little bit, we'll consolidate. And then from there, we can figure out where the next trend is going to be. So right now, it's a wait and see. Certainly be cautious. If you are nimble enough to trade this market and you do have an edge, absolutely. Why not? Because this volatility is something that a lot of us, people who started out with day trading and learned it, got it down, that's how we became good chartists, are going to thrive in this market. If you're not that guy, leave it to us. We got this. We'll give it back to you when we're done with it. So that's my take on it.
So I got to say, Grant, you're like trending here. Your buddy Get Yeeted, and you're all up there. You got a lot of comments going here on YouTube, man.
Yeah, I don't know. I mean, my friends are messing around a lot, so.
No, we like it. All right, so let's cut to the chase since Matt put me on the spot. All right, so you publish a portfolio. Oh, you got something to say, Matt?
Well, no, I was gonna. So, Grant, do you also look at markets or just individual stocks?
Oh yeah, good question.
I mean, I pay attention to the market. I mean, I'll kind of read up on it every once in a while. Usually it's just specific stocks, but
Okay.
sometimes I do look at the overall market trends.
I mean, what obviously the market's doing a lot.
Mhm.
Do you have any thoughts on where we are right now?
Well, I mean, that's a great question. I mean, a lot of people obviously are thinking it's going to be a recession. I don't expect there to be a recession. I think the tariffs, as Jeremy said, I think it's overreaction. I think it's going to regulate a little bit eventually. I think it's going to take a while, but that's what I would expect eventually.
Huh.
Cool.
Yeah, good point. Digest a little bit, and then we'll see where we go from there.
So, I read your a piece you published. You just mentioned the guy's name. What is the thing you published in what piece? The
Dale
dividend
Hirschman?
investor? What's it called?
Yeah, I think it's called Sick Dividends is the site.
The SICK dividends, right? So you published in SICK dividends, and you put together a portfolio of 3 stocks: Merck, Amgen, and AT&T, right? All dividend payouts, all like 4%, 3% on Amgen. Stock's done well. But it looks like these stocks have all done pretty well. I mean, I think I did the math, and if I did the math correctly, that portfolio is up like 4% year to date, right?
Yeah. I mean,
So that's pretty good, right? So
thanks.
explain that. Explain that. Why don't you go into that a little bit? How you put that together and why you like those stocks, or et cetera, et cetera.
Yeah,
Feel
that's a
free to
great
say what you
question.
like, though.
Sorry.
You may want to let him talk.
A little.
All right. So, I mean, usually I go through like all of my stock picks through like I do extensive stock screening with like publicly available data. So the primary things that I was looking for at that time were like sometimes price to earnings growth ratio, the forward price to earnings ratio, because that's like what it's projected to be. And also sometimes like price to free cash flow, price to book value. And also I tried to understand the growth prospects of those stocks as well. And I think I made a mistake there on the Merck stock because obviously I didn't correctly evaluate that stock, and the consequence was like $10 drop. But the other two did pretty well. AT&T has done really well year to date. Amgen has done really well year to date, but Amgen was more of like a growth pick for me, whereas the AT&T pick was more of a value pick.
So wait, what mistake did you make on Merck?
So their drug Keytruda, at the time of me making that article, Keytruda was like 50% of Merck's entire revenue. And I mean, it was pretty ridiculous, but they seemed to have a solid pipeline at the time. So I kind of guessed that their pipeline would be able to offset like the loss of sales that they've had with other competitors coming in with um drugs that would like rival Keytruda, because those Keytruda sales were like starting to drop at the time. And so I thought that like, I mean, Merck's stock at that point was already pretty beaten down. They went from like what 130 to I think somewhere in the 90s at the time. Maybe it was 100. But I thought that was like surely they can't go that much lower. And I mean, with their upcoming pipeline, it looked like they could have gotten some drugs going that would have made some good sales based on the total addressable market of each of those drugs. But I mean, their pipeline was full of like I think over 100 different drugs that they were testing with, and so it seemed fairly promising. But I mean, it just didn't work out really.
All right. I mean, my argument would be that's not a mistake. That's just one that didn't work out. You know,
Yeah, I mean,
the top investors of all time are typically right like 30% of the time. You know, the key is when you're right, you win a lot of money, and when you're wrong, you don't lose a lot of money. And so all right, yeah. Cool. So obviously all of this stuff you didn't learn in high school, or did you?
um, are you asking like through high school classes?
Yeah.
No,
All right, I didn't think so. I mean,
yeah.
I went to high school like way before you were born. We didn't learn any of that stuff. So
Yeah. High
what?
school.
Yeah, so I
Sorry.
mean, give me a what got you into this, and where did you learn all these ratios and how to analyze stocks?
Yeah, that's a great question. So, back in I think fifth grade, or it might have been early sixth grade, my grandparents decided like, well, they decided to give my sister and I $200 each to just invest in the stock market, just so that we could learn like what it is, how it works, and how to make good picks. So, I actually like I didn't have a clue about how to do any of the investing or what it even meant at the time. But I was just like researching like suggestions from my dad and my grandpa, and I ended up taking their suggestions just because like, well, I thought they looked good. I mean, I didn't really know how to evaluate them at the time, and I got pretty lucky because they ended up doing really well. Full credit to my dad and my grandpa for that. But and then into going into like eighth grade, the $200 had kind of turned into like I think $800 because the
Those are Vreeland type of returns.
Yeah, I
Those
know.
are impressive.
Thank you.
The same thing.
Once again, I don't take any credit for that. That was my dad and my grandpa. But I think one of the companies, because we only invested in two companies with that $200 because we figured like embrace
What
the
were
risk.
they?
Yeah, we're just learning.
What were
So
the companies?
so one of the companies was called like the Medicines Company. I think they got bought out by I forget what company bought them out, but we bought them at like $20 a share and they shot up to like $85 a share, which was when they were bought out. And then we invested into Valero, I think when they were
Nice.
around like $60 a share maybe, and they shot up. And then I've since sold those stocks. Well, I had to sell the medicines company, obviously, because they got bought out. But I also sold out Valero, put it into some different stocks. And up to this point, like I'm starting to learn the metrics and everything. But also I like incorrectly assumed that like beating the market was easy because I did it, but it was just pure luck really. And so as I started investing, like I almost became sort of a trader, more of a trader than an investor really. Like I would like trade stocks every other month or whatever because they would have like a couple of good days and I think like that's good enough for me. So and it was kind of like I felt like it was kind of stinting my growth personally because like a lot of the stocks after I would sell them, they went up a lot. Like I invested in United Airlines when they're at $50 a share later. And I sold them at $75 a share and I was happy. Then I saw them go up like well over $100 a share. And then I was like, oh, what did I do? So, I mean, just learning to be able to hold on to stuff. And then I mean, it can also work the other way. Like I invested in DraftKings before when they were at like $24. They went up to $72. I held them and then they went back down to like $30 and I ended up selling them at 45. So it was good, but not nearly as good as it could have been. So just learning.
Who's your broker? Like, who do you do these trades through?
So I think it's called a joint brokerage account. So like my dad and I like share an account on Schwab
All
and I
right.
invest through there.
You can do like
I see.
custodial accounts that way too.
Oh yeah, custodian.
One of the things I was going to mention, and by the way, your parents and grandparents must be absolutely super proud.
Thank
I'm
you.
proud of you. you know,
I did that.
I kind of got my kids into it a bit as well, and then I slowly taught them a little bit more about technical analysis. But in the beginning, it was kind of simple for me and hard for them. I've always made sure that they understand the value of a dollar and hard work and stuff, and they go out and do odd jobs, mow a lawn or two, or help someone clean up a yard, whatever. Um, Long story short, they were doing this so they could buy like video games and stuff and new consoles and what have you. So I kind of held them to a standard. I'm like, okay, well, if you're going to do that, I want you to save up whatever an equal amount of money would be to the console or the game or the Xbox Live subscription or whatever you're buying, and put that into a trading account, and at that time a custodial account. And I'd have them slowly build up cash, and then I would teach them a little bit about price action analysis and say, okay, well, now you have this fund allocated that is, for Microsoft, or you have this other one at the time, even like when Bungie was trading, that kind of stuff. They would set that aside, and we would use price action to just kind of describe where the support and resistance was, and I just had them swing trade it. And over time, they picked it up pretty well. Fast forward, and this was like when they were in middle school and coming through that. Fast forward into high school, and the local high school we have here, where we moved to when my kids were going through the upper grades, they had in their economics class, they always had like a little stock picking contest, and it was kind of within the school region, and different schools would compete against each other to see which class could pick a better stock. And my kids, I mean, with nothing from me to influence what they chose, just with the little bit of analysis skills that they learned, they picked the two kids that have graduated so far, and my two younger kids haven't gone through that class yet, but the two that have graduated, they both picked like the stocks that would have won the entire region had the class followed through with the positions that they took, because the class would take different positions, and it would each student would allocate whatever their paper trading dollars were into the companies they picked. Well, I could probably say my kids would have won the whole district if the class would have followed through with their picks. It was pretty awesome. I got to say, I'm pretty proud of that.
Yeah, congratulations to them.
And the trades you've made, those are my kind of trades. So nice kudos on those.
Matt, why do you pull up a chart of FMS, Fresenius Medical? This is one of Grant's picks. I think like it's up 5% year to date, has like a 2% dividend. They do kidney dialysis, et cetera, et cetera. This is a pretty good one now. What do you think?
I mean, it's held up there. I mean, relatively well compared to all the other stuff.
How'd you come up with this idea, Grant?
Well, I wanted to kind of like diversify my suggestions, because I was noticing that a lot of my picks were more US based, and I wanted to kind of like be able to expand a bit outside of the US, because, well, if you look at the US market compared to the international market right now, you'll see one market's typically doing better than the other. So it's typically better to diversify your investments into different countries. So I thought, like, how about I just look into what stocks I might want to buy internationally. And obviously, I mean, there's a ton of value internationally, but a lot of that value doesn't materialize and it doesn't realize because I mean, Europe specifically is not as attractive of a place to be buying companies and stocks compared to the United States. But I thought I might throw Fresenius Medical Care out there, because I thought they seemed to be a pretty good value pick, as well as growth with their the kidney thing that they were specializing in. I don't completely remember it.
Kidney dialysis.
Yeah.
Yeah, kidney
Yeah.
dialysis.
No, it's a good idea. So, Matt, what do you think about this?
Well, just so
Go ahead.
this
Go
is a
ahead.
German company.
Yep.
Mhm.
Yeah. Oh, no. So, Matt, what do you think about I was going to say the European value differential, excitement, all that theme? What do you make of that?
So I didn't jump into it at the beginning because I think it was purely, I mean, there was nothing to it beyond valuation, except for the defense stocks, which, I mean, we've been on that since like September. I did today just start nibbling at Germany.
Oh, really?
Yeah. So I
Like
I
what?
bought, what's that?
Like what? Because my wife's German. I love Germany.
I bought calls on EWG. It's the German ETF. I want options. A lot of these ADRs typically don't.
And why is that? I mean, like, why Germany? Why Europe? I'm completely in the dark on this. Like, why that?
I mean, kind of for what Grant said, some diversification. I think Europe is a basket case, but I think it showed at the beginning of the year, the potential of having some money elsewhere. EWG took off. I didn't buy it, but it got crushed with everything else. So I bought the dip.
Okay. So can you pull up Bitcoin chart, Matt? BTC? So I'm just going to comment. I'm just going to read some of the stuff you said in your value investors community, Grant. Yeah, about Bitcoin.
Yeah.
And you said stuff like, should value investors buy Bitcoin? Does Bitcoin have any intrinsic value? The more I thought about it, I think Bitcoin does have some intrinsic value. So what do you think about Bitcoin now, Matt? What do you think about Bitcoin, Matt? Like, do you think it has intrinsic value, Matt? And, both you guys.
I think that Bitcoin is something that you ought to have in your portfolio. Yes. Is it backed by anything? No. Do I think now it's going to zero? I don't. Um, you know, you had a lot of Bitcoin people saying, oh, this is a hedge to kind of what's been going on. It's not. I mean, it's for the most part a risk on asset, but I do think it's something that you ought to own. I don't own it at the moment. I'm looking for a spot. But if you're a long-term investor, yeah, I think Bitcoin's something that you want to hold. And there are a lot of reasons, but I'm more interested to hear what Grant thinks about
Yeah,
it.
Grant.
Yeah, so I mean I've done some reflection since that post. Um, I don't really think there's exactly like intrinsic value within Bitcoin.
Right.
That said, I don't think that makes the actual value of Bitcoin zero because you look at the US dollar, it's just paper. Like it doesn't have any intrinsic value, but it still has value because, it has credibility from the United States, if like I mean, Bitcoin is so big now, like as you said, it's practically impossible for it to go to zero. Everybody's gonna have some sort of interest in it at some point, really. And so I think if more countries start buying Bitcoin more, I definitely think that like the value would have to go up because more credibility is gonna be integrated into it.
That makes sense.
Yeah, what do you think, Matt? I'm serious. Like, what are your thoughts when he said like, what do you make about Bitcoin intrinsic value, government? Like, you talk about this a little bit, can you?
Yeah. I mean, there is no, like Grant said, there's no like, when you own shares of a company, you're a part owner of that company. Um, it used to be the dollar was backed by something. Now it's just the full faith and credit of the US government.
Right.
So there is no intrinsic value in owning Bitcoin, but Bitcoin has become an asset class in and of itself. It's become a market. People trade it, people ascribe value to it, and people will buy the dips. So
So,
it is I mean, it's not as well a functioning market as, say, the market for Apple stock, but it's a pretty mature market at this point. And, it is a different asset class that I think if you're constructing an asset allocation, you ought to own.
so Grant, you said 3% Bitcoin. Do you still think that's the right number, more or less? And what do you think, Matt? And Jeremy too, for that matter. What do you think, Jeremy?
I I think I'd probably stick probably between 1 or 3% for most people. I mean, obviously there's exceptions, there's not really a percentage that's acceptable for everyone and everyone and anyone. But I mean, I think you could argue that there's more risk to not own Bitcoin than there is to own Bitcoin, depending on how far it can go up. I mean, I just think the growth potential is kind of crazy when you have something that's already as hyped as Bitcoin is. I mean, it has a limit as well. Like I'm not very big on Ethereum because an unlimited amount of Ethereum can be created, whereas Bitcoin, it's finite.
So you like, where do you think, Matt? Are you at like 3% or 10? I mean, do you think 3% would even be enough alpha to even buy it? Is it worth buying 3% of something, do
Yeah,
you
I mean,
think?
I'd probably be closer to 5
Yeah.
because yeah, I don't know that 3% moves the needle enough. Yeah,
Right.
again, and that's assuming you're a buy and hold asset allocation person, which I'm not. So, when I do go in and buy, and what I'm going to buy, options on the exchange traded products. I mean, we've got obviously one, and then there are others in all size, according to what I'm, feeling at the moment, or, and how my overall portfolio is. Like, right now, I'm not going to do big size in anything because I don't trust, anything I'm looking at. Um, but in a market that's going up in a straight line, which we'll get again, then I'd probably do pretty big size in Bitcoin, or big
Right.
size for me, which is not the same as big size for somebody else.
All right.
I'm,
Jeremy?
and you know where I'm at. I'm in pretty much a lot of Bitcoin leveraged and aligned products. Currently, I'm still running the wheel trade on MSTU, which is an income strategy, and that even shocked Chris last week. He was like, "So you're trading something that's leveraging 2x against something that leverages Bitcoin 100x?" I'm like, "Yeah."
Chris is out there doing wheel trades like crazy.
I bet he is. If he crosses over my cost basis on there, which is what was it currently 264? I had some puts expire worthless. It's pretty neat to do because one, you're in a leveraged product, so when you go to allocate, if say 3% is safe, and most people would agree, you spend about 3% of your portfolio value in something that you're speculative on. I get that. I'm currently about 5% with this one, but it's an income strategy. So its investment goes down, and then I go and reinvest and just compound the position later. So it really depends on your strategy, in my opinion, depending on what you want to do with it. If you want to use the utilitarian approach, sure, you can allocate into some stable coins to kind of be a parking place between Bitcoin in and out if you want, or you can do things more complicated like I do. So it really depends on the investor and or trader.
So Grant, I told you to come up with some stock picks. Give me one. Let's hear it. Matt, pull up a chart of this one. Drum roll. You ready for the drum roll? Should I do? I got 2 pencils here. Ready? Here it is.
Thank you for a drum roll.
Here it is. What is it?
Well, yeah, I mean, it depends. How defensive are you really looking for?
I'm not defensive at all, man. Swing for the fences.
Alrighty. Well, in that case, I'd probably recommend New Holdings. It's a finance tech company.
Yeah.
I think the last time I saw them, they're around 972 a share. They definitely changed from there. I'm not
Look
sure.
at that. They're already up 1036. What a
Oh,
call.
really?
Wow.
So Matt, give us our technical analysis on this, both you guys. I'm curious.
So
Yeah, I mean, you've
it's a
got,
digital banking.
oh no, you first.
Go, you first. Go, Grant.
Let the chartist go.
So it's a digital banking platform, and like they currently serve 58% of adults in Brazil, which is like crazy. And they're planning to expand further into Latin America, maybe even the US. I'm not really sure yet. But the growth part, which is really the reason why I recommended it, is because they're like introducing a bunch of new applications and methods. So you've got New Pay, which provides digital payments for both like online shopping and in-store transactions. You've got New Travel, which lets users plan and book flights, hotels, and other travel-related services through that app. You have New Marketplace, which is a comprehensive shopping platform designed to be a one-stop shop for all customer needs. And then they recently introduced something called New Cell, which is a mobile phone service to round out its offerings.
All right. So now, for me, looking at this chart, there's a lot going on.
Right.
So first, you've got an undercut and rally at this March 4th low. So 989 was the low it made March 4th. It blew below that during this whole tariff thing. Now it's at 1036.
That's a good thing, right?
That's a good thing. It's also right on top of the 10-day moving average. You'd want to see it move above. And this chart is not. Yeah, all right. It just did. So, and I think actually it's Grant that moved this thing another 2 cents. So
I like this one, honestly.
Yeah.
It's a good
so
one.
It moved above the 10-day. So, that's another plus. It's going to have some resistance here at 1175. If it can break through that resistance, it's going to fill this gap up into the 13s because, that's just typically how these things work.
My friend, his name is John. He used to talk about this stock all the time. And if I didn't know him, I may not know Matt because John and I used to trade SARK all the time. I didn't even know what SARK was. And I didn't even know SARK was related to Matt when we met. And then when I realized that SARK and Matt were the same, I don't know, it was a great thing. But anyway, so John used to talk about new all the time.
Yes, key point being were. So we
Okay.
don't talk about that one anymore.
I like this
All right.
chart.
So what's the next one? What's the
Wait,
next
wait,
one,
wait.
Grant?
So one thing
Oh,
the
go.
one thing I would just point out, the one reason I'm not in new, and I look at it every once in a while,
Yeah.
I'm concerned about what's going on politically in Brazil.
Mm,
And I may be wrong to be concerned, but yeah, I still am. So
yeah.
I've been avoiding the Brazilian stocks because of the political situation. Argentina, the Argentine stocks were like the top performers in my portfolio last year. I'm out of them too, but I've been worried about Brazil.
What do you think, Jeremy? I
Yeah.
didn't mean to cut you out,
Wait,
bro.
wait, wait. Grant wanted to say something.
Oh, go.
Yeah, we don't
Sorry.
care
No,
about
Jeremy, you're
Jeremy.
good. Jeremy, you're good.
I'm just doing the technicals now, and I'm liking the chart. In fact, real quick, if you want to zoom out on the weekly chart there, real quick, you'll see that market structure's done on this one. It's now given the halfback that I love to watch for something like this to return to, and then short term. I'm looking at a target of like 1180 for about half the current trend, down from like 1375 to 9. As a short-term target, and then reversion would take it to about 1250, half the top half of this trend back up, and then if it starts to consolidate there between a little above that into the fib levels of like 1350 or so, it's got a pretty good chance of if things go smoothly politically in the country, this could be something that would eventually start a trend. This is about where I'd start to look for it. If things go smooth, I kind of like the chart. Short term, it's got plenty to offer for some scalp targets or swing trade targets, if you will. And then medium term, it's got some decent investment potential. And then if it's got the right things going for it, it's got some pretty good highs to return to. So I do like the chart.
Yeah, and those August lows are even more impressive to undercut and rally on
Oh yeah.
than the more recent ones.
And what's the risk in Brazil, Matt? Like, what's going to happen, or what good could happen, or what bad could happen, or whatever?
So, I mean, I don't want to go down the rabbit hole, but I mean, basically, you had a very contested election, front runner who didn't win, who now,
see.
they're going after with lawfare, the same old kind of story.
Right.
Yeah.
Got it. And what would change that in your mind? Like, if suddenly, what would happen? You'd be like, I'm all in. What would have to happen?
I mean, he would have to somehow be brought back into power.
Got it.
I'm gonna
Jovi?
name Bonjasoro or something like that.
Got it. Okay. So what's your next one, Grant?
Wait, hold on. Grant had
Oh.
something to say about new, I think.
Oh, go, Grant.
I was just gonna say, I think there would be like a trade-off that you're risking because like new doesn't really they don't really do a lot of business in the US, I don't believe. And so I thought that like that would protect them a little bit from the tariffs issue. On the other hand, they also do have the political issues going on. So I mean, you're kind of trading off a little bit between those two issues. But yeah, I mean, you make a great point about not investing in Brazilian stocks.
So the fundamentals
Right.
line up too. Volatility, baby.
Number two, man. Drum roll again, or we'll skip it this time.
I don't mind. I think if you're looking for a more defensive stock, I think there's probably no better pick than Berkshire Hathaway. And
Ooh.
I typically stay away from like the really big companies because they don't usually have any organic growth. But in this situation, I mean, I'm not really looking at like the valuation prospects of Berkshire Hathaway. I'm also not really looking at the growth prospects of Berkshire Hathaway specifically. I'm looking at like, they're sitting on $300 billion in cash throughout that whole tariffs thing. So, I mean, the entire market could potentially be undervalued right now, as it stands. And so I think Berkshire Hathaway has a huge opportunity to capitalize on that with $300 billion. And I mean, the investments are being led by none other than Warren Buffett. So, I mean, I trust him pretty well with what he's doing.
He's going to need someone to take over for him fairly soon, just so you know.
Right.
I'm gonna take
Matt,
my
what
eyes
do you
off the
think of this
chat,
one?
guys.
What do you think of this, man? What do you think of Warren Buffett, Matt? I'm curious. We never really talked about this ever. So what are your thoughts
How
on
did I
Warren?
get on the chat? I'm not on the chat.
Someone says you're on the chat. I don't know. There's
No,
some
I
fun
know.
stuff going
I'm
back
on
and
there
forth.
too.
Okay.
I'm on there too. We're this is great. It's fake Matt, they say.
Okay.
See, it's fake
All
Matt's
right,
on the
fake
fake
Matt.
chat. It's
All
some
right.
of Grant's friends here. I love it.
It's
man.
almost good
This is
enough,
what it's all
chat,
about.
Matt. It's got the same sense of humor.
I
So
knew this would be good, man. I knew this would be good. Trust me. You guys got to give me credit for this one.
Yeah.
All right.
you know.
So Berkshire Hathaway, Matt. Like, so talk about Warren Buffett. What are your thoughts on him and like this whole diversification? Would you ever buy Berkshire because it owns like a million things, or is that a good reason to buy it or not to buy it, or all that?
Wouldn't, because I'm more of a swing trader than anything else. Now, if I had bought it on the undercut and rally at the 200-day moving average yesterday, I'd be a very, very happy guy.
Right.
Would I buy it up here for me? No. But would and should someone who's more a buy and hold investor looking for a more defensive stock pick? Definitely.
And Grant, I got a question for you, right? You're a kid. It's $500 a share or whatever. Can you go into like a platform like Schwab and buy half a share and all that? Can you do that? Or can you
I do think that Schwab like revealed a feature that allows you to do that, but I think it's a fairly complicated process for me. I haven't ever tried to do it yet. So I just buy the shares whole, really.
got it? Okay.
Pat, you're assuming he's trading with your account size. He may not be. He may not be. He may actually have some money.
This is like I'm trying to make like this a little bit educational. You know what I mean? All right, Grant. So third one, got one more for us, or no? Is that too much?
I do.
Oh, geez, here we go.
I
This is
think
great,
the
man.
reason-
I'm actually having the most fun on this one of all of ours so far. This is great.
That's good to hear.
All
I
right.
think if you do think that a recession is almost imminent, but you don't really want to invest in like gold itself, I'd recommend investing in a gold company like Anglo Gold Ashanti PLC.
Ooh.
I think they're around $33.36 from yesterday. I'm not sure where they're at right now.
Yeah, no,
they're down to
good
34 right now.
call. I went back into gold miners yesterday. I didn't buy AU. I bought AEM, which looks the exact same.
Okay.
And Franco Nevada, which looks the exact same. But yeah.
Mm-hmm. Yeah, so I mean, the main method behind this is that like not only do you have gold or a company that mines gold, you have them at a pretty cheap valuation because they have a price to earnings ratio of I think around 15 and a dividend of over 4%. So you're investing in like kind of both a company and gold itself at the same time. And so I think that's a pretty good pick for if you think a recession's imminent.
Good point. Park your money in a safe place that still earns. That's always.
What do you
it.
think about dividends, Matt and Jeremy? What do you guys make of those? Did that like change the charts at all, or is there anything dividend? What do you think of dividend stocks, Matt?
I am not personally a fan. I think that any money you have is green. Capital gains, interest, dividends, whatever. And I think when people focus on dividends, they miss everything else.
Right.
So, for example, I have been a frequent skeptic on all the covered call ETFs that generate like 100% yield. But then if you look at the total return, which includes the yield, the total return sucks. But people sit around and be like, oh, I just got this big check. It's like, yeah, but you put $25 into this ETF and, with the check you just got, you've got $20 now. So you still lost money.
It's your own money.
And I think people often forget that.
And
Okay, so you're saying you'd avoid dividend stocks, or just kind
I
of
don't
irrelevant?
avoid
You buy them
dividend
if you like
stocks.
them.
I don't go out of my way to invest for dividends.
Got it.
And then there's guys
I
like
see.
me who will, sell options on a dividend stock and scalp the dividend. So I mean, it's terrible, but that's just the way, I make a living. And that's one key point I've always kind of pointed out with dividend stocks, especially the ones that claim such, lofty yields, is that it's your own money. And then not only that, it's taxable gain. So you kind of shot in the foot there with that. Um, Personally, as far as dividend paying stocks go, I mean, sure they have their place, but I'd rather see them reinvest in the company and promote growth than to just hand off cash to the investors to maybe give them a little kick down here and there. One I know that does that a lot more than anybody, and actually I think they kind of bank on it. You've heard me slam GM around a lot, but that's one of the companies that I look out for when it comes to getting your own money back as a dividend and realizing it's just coming out of the equity overall. So in the long run, I mean, they have their place, and in certain aspects, you can put it in a retirement fund and take a little bit of a tax break on it. That's more of what they would be meant for, and eventual growth. But for me, yeah, I'm just I'll scalp them until I can maybe hold some long term in my retirement accounts, which I'll still sell options in. So
Matt, don't you think, or Jeremy, you too? I mean, not Jeremy, but Grant, you too. So wouldn't like a dividend growth strategy? Wouldn't someone? I mean, I'd love to have someone on the show to come talk about it, but like, wouldn't a dividend growth investor say completely the opposite of what you guys are saying? Like, wow, what you're saying doesn't really make any sense. What do you think of that, Grant?
I mean, I see both aspects. I mean, because on one hand, it's like you get 2% of whatever you invest in, for example, or whatever, and that sounds good. But then you also have to consider that like the company is paying dividends for a reason. They probably don't have money to reinvest into the company, or they don't know how to reinvest into their company sometimes, and so they'll just pay it back to shareholders. And so I mean, when I look for stocks, I don't typically like the dividend is not a make or break for me, because in the end, I'm not investing in a dividend. I'm investing in a stock with a dividend. And so I mean, Polaris is like a great example of this. Like they have great valuation metrics and they offer like a 7% dividend, but their stock has just been awful. Like year to date and over the past 6 months, I think they're down like atrociously. And a lot of people are saying like, this is a great time to buy. They're undervalued. Like, no, it's not, because the company's return on invested capital is getting smaller and smaller, and it hasn't improved on a quarterly basis since the first quarter of 2023. And their earnings per share have been trending down like for quite a while as well.
So this is a short idea you've come up with now, Matt?
It could be.
All right. Which one is this, Matt? What's a short? Polaris? That's the old, like, what is Polaris? Is that like the company that makes snowmobiles and all that?
Yeah, snowmobiles, I believe.
Yep.
What's the symbol of that one?
PII?
Yeah. Yeah, that's it. And why don't you like this one?
Because
He's not the only one.
the ROIC has been trending downward since early 2023. Their earnings per share are trending down as well. So like the growth prospects are pretty awful. I mean, that's not to mention Polaris has had an annualized revenue growth of 1.2% over the past I think 5 years or so. It's been awful. And so I don't see any growth prospects at all in them. And you could argue that like they're undervalued, but I don't think it's ever worth investing in a value stock that doesn't have any growth prospects.
No.
Matt just did his infamous left-headed like turn there.
Is
that in order? Was that a short order?
No, I mean the time to short this would have been further back.
So what do you think, Jeremy? What do you think of this chart?
Still be a short, but that's not what I like to do.
Let's say you had to buy it or sell it. What would you do? There's no hold. I put a gun to your head. Jeremy, buy it or sell it. What would you do?
Gosh, man. I don't know if I'd short it this low.
To take the gun away from your head.
You're right. Yeah, I'd probably pull some Krav Maga stuff and turn the gun on you. But
yeah.
Dude, I know Kung Fu, bro.
I'm never one to go straight short into a stock like that.
I know Kung Fu. That's great.
I know a little Kung Fu too, but Krav Maga's better.
Kidding.
I'm
just
anyway.
Kidding. Totally kidding.
Long story short, I never go whole hog into shorting anything. Anyways, I'll do like debit spreads if I'm going to speculatively short something or be in a bearish position on it. I'll apply leverage to it if I feel like it's going to have a very rapid trend. Something like this, though, I'm sure the volatility is somewhat low. So the swing in options pricing, even in a trend like that, is not going to be all that great. I mean, you might get like a 15-20% return on a couple sets of debit spreads in the right place, but I'm after bigger fish. I'm typically shooting for 80 plus on debit spreads. So if I see something that's volatile, that's where I'll be. In the long run, though, and I can agree, like, you get something that pays out too much in dividends, doesn't really reinvest in itself, in spite of drip investors, people who reinvest their dividends and kind of compound their positions on those dividends. The company's got to do something about this chart.
So Jeremy, wait, are you giving me an answer? Did you give me an answer? I completely
I
lost
gave you a
track.
vague one. I'll never short something like that. I wouldn't short it
Okay.
here. But if
right.
I was to speculate, I would take a limited risk approach and go with debit spreads. Put debit
Got
spreads.
Okay, so Matt and Grant, you talked a little bit about asset allocation in one of your posts, Grant, right? So what are your
A
thoughts
little
on
bit.
asset allocation?
It depend on, I mean, you mean like for the average person?
I don't know, just in general, but that's, you just said, you had just made a comment like you think asset allocation is important. And, I'm just curious what your thoughts are, because Matt talks about asset allocation, but I wonder what I was hoping you would talk about what you think your asset allocation is. And then I thought Matt would comment on what he thought.
So, well, my personal asset allocation?
Well, no, just why don't you give us your thoughts on asset allocation in general, and how you would do it if someone said, hey, well, how should asset allocation be done?
Well, I think it's highly dependent on your age and your goals. So like if I were a 22-year-old and I wanted to have $1 million by the time I'm like 35, I would have to invest really aggressively. So I'd have almost everything, if not everything, invested in the stock market. That said, the stocks would probably be pretty diversified for the most part because you don't want to risk your entire life savings even at 22 years old. But for an older person, say they're like in their 60s, 70s, even 80s, whatever, and they're just looking to retire. I mean, at that point, you if they have enough money to retire, I wouldn't really recommend putting much money into stocks at that point because it seems kind of like unnecessary risk to that extent. But if you're putting like most of your money towards like bonds at that point, or even gold at that point, I think that would be pretty good for like older people.
That makes a point. I mean, the old safest houses adage kind of comes into play there. I mean, when you're in a position where you're having to survive on that anyway for distribution, and then at the same time you want to leave a legacy behind for your family and anybody else you might name. Some people name their dog, whatever. But you get into something where you can't take it with you. Unnecessary risk is definitely something to consider. But for guys in my shoes, where I kind of transitioned careers here. I started out, living paycheck to paycheck like most people in this country, and I've gone into trading, starting with basically nothing. I built it out of a very very small fund. Now, I'm able to distribute a good chunk of that and survive on that and pay the bills on that. So, I mean, that was my goal. When I get older, when it comes to distribution, that's going to be a totally different ball game. I'm going to have to do what I can now to grow those assets to the point where they're going to be survivable at that point, and then deal with that later. But in the meantime, I also recommend, if you're at that point where you're kind of midlife, start learning some stuff, learn some income strategies, learn a bit about options, and that will really, really help you make a dollar go far in the future if you know how to work it. And even in old age, you can still do it. It's not something you forget. It's like riding a bike.
Hey, so we're getting near the end here. Grant, what grade are you in?
Currently a junior in high school, 11th grade.
And do you have a sense yet of so you haven't started applying to colleges yet, have you?
Not yet, no.
And any idea where you want to go?
I think, well, so for the past like year or so, I've been all about like Indiana schools because it's my home state
Yeah.
and state tuition is a lot less. So I've been looking a lot into again, IU and IU and Notre Dame because obviously IU has a pretty prestigious business school and of course
Kelly
Notre
School
Dame
of
does as well.
Business. Yeah,
Yeah, one of my
one of my
friends who was
kids went there for a year.
one of my friends
Uh,
went there
Really?
too.
Yeah, he didn't last, but I have a feeling you're slightly more motivated as a freshman than he was. And any sense on what you want to do after you graduate? Stay in the investment world?
Yeah, so I mean, I'm not completely sure what I want to do after I graduate, but it would definitely be something more like entrepreneurially inclined. So like whether that be like maybe managing a hedge fund, which I don't really see myself doing, but who knows? I think the most likely option for me right now would be to start like a financial advisory firm. Um,
Yeah,
and like,
or I mean, you could be. I mean, if you got into Notre Dame or the Kelly School of Business and did well, I mean, you
Mhm.
could be an analyst at a hedge fund. I mean,
Yeah,
you're not going to start managing a hedge fund at 21, but you can be an analyst, work your way up, and and end up being a hedge fund manager at a pretty young age.
Absolutely.
yeah, that's a great point. Yeah, I'm definitely gonna be looking for internships for sure by like my sophomore year of high school or of college.
Look at internships. Look at them. Even I mean, most places don't do them after your freshman year, but you can find someone to do that. I would definitely do that, and I would focus on your grades. I
Of
mean,
course.
college is fun, but you have too much fun. You regret it
You
later
end
on.
up on a show like this.
What's
Ah,
that?
You end up on a
Yeah,
show like this.
yeah. You end up hosting a show like this.
this might be a recruitment move here, man. I kind of detect that.
I mean, if we end up one day starting a hedge fund, or he could contribute to our paid newsletter.
There you go.
Yeah, I know for sure. I mean, if you have any ideas, send them up, man. We'll take a look. So I was going to say one more thing here. So we got like what, 2 minutes, maybe 3 minutes.
2 or 3.
So Grant, you had sent some things about your stakes earlier, but I'm just going to go through it real quick. Assess risk tolerance, identify your goals, determine your expertise, identify your time horizon, gauge your emotions. These are like good strategies. I mean, this is what everyone should be doing, right, Matt?
I mean that's a rabbit hole.
Oh,
I mean, yeah, everyone should be smart about their investments. I believe everyone should be somewhat more nimble than most people are. And what's happened, the past couple of days goes to show that. I mean, when the president and the treasury secretary tell you things are going to get rocky, then regardless of your age, you probably don't want to be fully invested into something like that. Um, but exactly what the problem with the investment field is there's no right answer. There are a bunch of wrong ones. And there are probably a lot of people sitting around looking at their portfolios, realizing that whatever they were doing was wrong. But it's kind of, the Warren Buffett quote, when the tide goes out, you realize who's been swimming naked. So, you know, really, if I'd have to give one word of advice, it's just you got to be smarter about your investments, and you need to be educated. I mean, we live in a society built on, us not doing everything for ourselves, having,
right.
experts in
I
every
agree.
area. But there are two where, yeah, you can delegate, but you need to know what you're doing, and that's health and that's finance. Those are the two areas. If you delegate to the wrong person,
Right.
you have life-changing, don't come back from mistakes. If I have the wrong plumber, then yeah, I have a leak I've got to clean up, but I can do that. if I have the
Right.
wrong financial advisor, I lose a whole lot of money that maybe I should not have lost.
Right.
Agreed.
Hmm.
And obviously, if I have the wrong doctor, all sorts of bad things happen there.
Well,
Got it.
unless you need Dr. Kevorkian. Wait, not.
Yeah.
All right. Anything else, Jeremy? I mean, Grant, any last comments? Any last wishes? Anyone you want to shout out to? Anyone at your school? Anything to say? Any teachers? Any teachers you're begging for a good grade? You could shout about right here.
There you go.
Mr. Atkinson, please
Yeah,
give me a good history grade.
Mr. A. He needs an A.
Hey,
Right?
this could
Yeah,
be
you
historical.
I mean, you're getting into Kelly or Notre Dame. You need all
Yeah.
that.
Our boy Grant here needs to
Right.
get into Kelly or Notre Dame. He needs that A.
True. This program should be admissible for a grade. You know, this is
Yeah,
this is
exactly.
historic now.
Like,
All right. All right. So, anything else, Jeremy? Are we going to say thank you or anything?
Yeah, Jeremy, how do we end this?
How do we say thank you, Jeremy, to people? Yeah.
Oh, we can just do a kind of an outro. We'll sign off in a moment. I had one quick thing to add. I know we're on overtime, but just we've been talking about this a little bit. You know, we're kind of keen on the idea that there might not be another Warren Buffett anytime soon. In the
I'm
same
keen on that idea. Yeah.
in the same respect, the right guy could outperform Warren Buffett in the fact that they would be more nimble. How you would allocate things to be able to maintain that ability to be nimble in a market like this, as more and more participation causes more and more volatility overall, compared to what Warren Buffett grew up with. We've got to adapt with the market. So I kind of wanted to paraphrase that there can be another performance like Warren Buffett. There could be someone
Right.
in that
Just
in that
not
field.
the same way.
Exactly. And that's what we're getting at. And we look to you, Grant. You might be that guy. I mean, you've got the potential to really get there, and I can really see that you are very good at taking in the wisdom and putting it to use. So kudos to
I
you, sir.
appreciate that.
Jeremy, you're making me cry over here, bro.
Hey, man, proud father here too. I gotta
All right.
give it where I see it, and it's definitely deserving it.
All
I
right.
appreciate that.
Congrats, man. No, that's congrats, Grant. We're glad to have you on. man.
Absolutely.
Proud of you, bro.
Thank you guys so much for having me.
Thanks for
All
being
right,
here.
see you later.
Coming.
All right, guys. Thanks for joining us on YouTube. We really appreciate the support. All the likes really help us beat YouTube's algorithm, get out in front of people, and you know how that goes. We want to do something to provide value to everybody we can get in touch with, and that's you. Thank you very much for your support. We'll see you guys next week.